Energy company EQT is lower today. The company reported third quarter earnings results beating on the top and bottom lines, but fourth quarter capex and production guidance falling below the street's estimates. Joining us now to break down the quarter and the energy complex is EQT President and CEO Toby Rice. Toby, welcome. So tell me about these strategic curtailments. What is it that's happening in the market that has you pumping the brake a little bit?
Yeah, as an energy producer in this era right now, there's three things that we're focused on: making the energy we produce cheaper, making the energy we produce cleaner, and then that third attribute, making the energy we produce more reliable. That is all about making sure that we're delivering our energy to the market when the market needs it. And given volatility and seasonal swings in prices, there are periods of time, like in October, where prices are low and we have the opportunity to shut in our production, hold that production for higher price markets, and that's exactly what an opportunity that we're taking advantage of here at EQT.
How long?
And it's the reason why we're seeing better realized pricing as a result.
Okay, how long do you expect that to take, and to what degree should investors and analysts be able to expect that based on the way they see the prices fluctuating?
Well, this has become a normal part of our production operations. Thanks to our vertical integration, we have a tremendous amount of flexibility to increase the reliability of our energy. But we are communicating with our investors. This is going to be about 20 BCF a day of natural gas. So at any given point in time, we could shut in up to a BCF a day to 1.5 BCF a day of natural gas. In the grand scheme of things, when you think about how much energy that we produce at EQT, over 2.3 trillion cubic feet of natural gas per year, 20 BCF is not a large in the grand scheme of things, but it is an opportunity for us to get better realizing pricings versus expectations.
So, Toby, what is your longer-term outlook for natural gas and demand for it, and thus perhaps pricing? I mean, we're hearing about all these LNG deals potentially amid all of these trade deals that are getting struck, and we know the AI compute build-out is going to require a lot of energy.
Yeah, the demand story for natural gas is very exciting. We have, three themes that are driving natural gas demand. The first one being the continued evolution of our energy systems, replacing coal with natural gas. That seems to be a little bit on the back burner with this administration as they focus on the reliability of the energy systems. But that's okay, because we've got two other major themes that we're excited about. The LNG build out. We are past the halfway mark of doubling our LNG exports. We're on pace to get to over 30 BCF a day of LNG exports by 2030. We're at 18 BCF a day today. That is a massive amount of energy. That's providing energy security to our allies. And then the other major theme that's really materialized over the last 24 months, you mentioned it, this AI build out. Absolutely massive. Our job at EQT as America's natural gas champion is to make sure our tech customers have all the energy they need so they can run full throttle to win this AI race. The estimates for the power demand are all over the board, but let's just look at what Secretary Chris Wright has said. To win this race, the U.S. needs to generate over 100 gigawatts of power to feed the AI revolution that's taking place. And to put that number in perspective, that is the equivalent of building an energy electric ecosystem capable of powering 20 New York cities. And we've got to do this over the next few years. All of that is going to require a tremendous amount of natural gas, and EQT, we're at the front of a lot of those conversations.